Okay, good morning, good afternoon, and good evening from wherever you are. Welcome to today's AMA session with iFAST management. I hope you guys had a good rest, and those in Singapore, I know it's work day, but hope you guys have a fruitful time today. And let's just begin right away. So for today, we have two guest speakers from iFAST, Goh Chuan Yong, who is the Regional Director in the CEO's office, and John Paul Wong, who's the General Manager of iFAST Singapore's B2C division, FSM1.com. He's also the Director of Corporate Communications Department. If you have any questions for iFAST, you can do so by asking your questions through Slido. You can scan the QR code here, shown here, or you can even click into the link that my colleague has sent over in the chat box. So just keep your questions coming in. So without further ado, we're going to go into the presentation by iFAST. So take it away, iFAST team.
Hi everyone. So thank you to the MoneyWiseSmart team, thank you Sudan, and to all the investors who have joined us for this AMA. So Rahul and my colleague Chuan Yong and Keith are here. So we'll be taking the questions later on in the Q&A. But before the Q&A, we'll just run through quite quickly some of the key summary points from our first Q results for iFAST Corporation. So in our key summary, we shared a few things. So we started by sharing with investors about how global market conditions for stocks and even other asset classes like fixed income went from very positive in first Q 2021, so 1 year ago, and that has changed to very poor in first Q 2022, which has resulted in a weak start to the year 2022 for us. In first Q 2022, our net revenue declined 1.2% year-on-year to 28.15 billion Sing dollars, as an 18.7% year-on-year decline in non-recurring net revenue offset an 8.8% year-on-year increase in recurring net revenue. So the non-recurring net revenue part declined by a lot more compared to that increase, in fact, that we saw in recurring net revenues. Looking at our operating expenses, that increased 10.4% year-on-year to 21.12 million dollars in first Q of this year. And this is really because we are continuing to invest and prepare for our next phase of growth under our 4-year plan. So there's a few pillars in this 4-year plan that we have been sharing with investors, and I'll be running through again later as well. As a result, our net profit declined 34.9% year-on-year to 5.74 million Sing dollars in first Q. A very key metric that we measure and we share with investors every quarter is our assets under administration, or AUA. So that has been hitting new quarterly highs over the last few quarters, but that declined for the 31st March 2022 number. So it declined sequentially Q-on-Q by 2% to 18.63 billion Sing dollars. And that's really because of the declines in stocks and bond prices globally, offset the positive net inflows of 669 million Sing dollars during the quarter. So positive news is there's positive net inflows into our ecosystem, and that adds to our AUA. However, that was offset by the decline in stock prices and bond prices in first Q. If we do a year-on-year comparison, our group AUA still grew healthily by about 15% year-on-year. So while it is clear to us that the wealth management platform business that we are building has very strong long-term growth drivers, in the short term, financial market condition can cause interruptions in our growth path. And this year looks likely to be one of those years. The acquisition of the UK-based BFC Bank was completed on 28th of March this year, and the bank has since been renamed as iFAST Global Bank. As guided previously, iFAST Global Bank is expected to contribute $4 million of losses to the group in 2022. However, we're targeting to achieve profitability for iFAST Global Bank starting 2024. Overall, we expect to see a moderate growth in net revenue this year as a whole, but we also expect to see some declines in profitability. However, if we expect to see a robust ramp up in profitability starting from next year, between 2023 to 2025, as our new e-pension division in Hong Kong becomes a strong contributor to us. Beyond 2024, iFAST Global Bank is also expected to become an additional important growth driver for us as we make progress towards having a truly global business model. With greater clarity on information related to the Hong Kong e-pension project, we have also updated the targeted revenue and profit before tax numbers for our overall Hong Kong business for the years 2023, 24, and 25. And for the first interim dividend for first Q, we have declared a dividend of 1 cent per ordinary share, which is the same as first Q 2021. So our AUA chart, as you can see, it's been increasing nicely. So that was a nice trend over the last few years. And that accelerated trend happened during the the period where there was a pandemic as well, and we benefited from that adoption of digital fintech services, and we benefited from that increasing adoption from clients of both B2B and B2C. However, as mentioned, market conditions were poor in the first Q this year, and Q-on-Q, our group AUA declined by 2%. About 70% roughly comes from our B2B division, and the remaining 30% comes from our B2C business division. As I shared just now, our net inflows is at $669 million in first Q of this year. So that's substantially lower than first Q of last year, which was a record high when we look at quarterly net inflows. So first Q of last year really set a high benchmark in that sense. The positive here for first Q 2022 net inflows is, I was sharing about how that is still positive despite the poor market conditions. And a very similar trend can be observed for unit trust gross subscriptions as well. So just running through some of the points in section 1 for financial results. I won't go through every item here. So, but if you look at net profit, it's down about 34.9% to $5.74 million in first Q of this year. And for EPS, similarly, it's 38.8% year-on-year decline in first Q of this year. Results overview shows the last 2 years of results as well as first Q of this year. So I won't really go through in detail for this slide. Profit before tax margin for us, we look at it and calculate it based on net revenue. So it's been a healthy growth trend in the last 2 financial years. And first Q, it held up quite well, although it's down compared to last year's percentage. So we're at about 26% PBT margin for first Q of this year. And for return on equity, so we see a fall to 9.7% in first Q of this year. So it's lower than the last couple of years, which was roughly about 20+%. For the financial indicators, we have a net cash position of $131.6 million, positive operating cash flows as well. CapEx was at $1.7 million for first Q. We have also given some guidance for CapEx for the full year 2022. And of course, shareholders' equity has risen to $237 million. So our net cash position, the positive, there are no bank loans. So it's a net cash position that stands at $131.6 million. And positive operating cash flows in first Q of this year. CapEx, we guided for $22 million for the full year of 2022. So slightly higher than our actual CapEx number in 2021. And in terms of number of issued shares, roughly almost 293 million shares as at 31st March. I won't go through the balance sheet items in details. The first interim dividend, as I mentioned, at 1 cent per share. So I'll just run through some of the key items in section 2, which is on the business update. So we have been sharing with investors about iFAST's 4-year plan. So the 4 pillars are as follows. Firstly, to get bigger and better. So we will continue to work on increasing the scale and quality of our fintech wealth management platform in the different markets, in line with this target AUA of $100 billion by 2028. Secondly, we will accelerate Hong Kong business growth. In fact, we see a substantial acceleration because we're working on an e-pension business project in Hong Kong, and we will continue to improve our existing Hong Kong platform capabilities. Thirdly, adding digital banking and other capabilities to our fintech ecosystem and making strategic investments in adjacent fintech capabilities, while ensuring that wealth management will remain the core service for us. So basically, still build on wealth management fintech platform in what we have been doing for the last 22 years. At the same time, open to capabilities which are new and which can enhance our wealth management system and which can add value to our clients. So that includes, of course, the digital banking capabilities regarding the UK acquisition. Fourth point here is about building a truly global business model. So we want to make tangible progress towards this vision of ours, which is to be a top fintech wealth management player with a truly global business model, which will be even more scalable as we make progress. So this is what I was referring to earlier on, which is an updated guidance on our targets, our Hong Kong numbers. So the key change for this slide compared to our previous guidance on the Hong Kong business. So this is for the overall Hong Kong business. So the key change is firstly, we have shared the targets for 2023 in this slide. Previously, we only had the targets for 2024 and 2025. So we gave numbers for next year. And of course, we also updated some of the numbers because of a greater clarity on information relating to this retention project. So if we look at this slide, essentially, we can tell the gross revenue targets, the net revenue targets, as well as the profit before tax targets for our Hong Kong business. So PBT target, for example, we're looking at over $100 million Hong Kong dollars in 2023, and a PBT of over $250 million in 2024, and over $500 million Hong Kong dollars for PBT in 2025. So of course, one of the key developments for us is the iFAST Global Bank announcement and acquisition, which was completed end of March. And we have renamed the bank to iFAST Global Bank. And we have also mentioned that based on the 85% stake we have, the estimated loss for this year is about 4 million dollars. We target to achieve profitability for iFAST Global Bank starting from 2020. So a bit of a background, just taking a step back on how we view wealth management and digital banking. So we believe that the future of wealth management is really one where many investors from various emerging markets will be looking for the best wealth management platforms across the world that can allow them to have seamless access and connectivity to global investment products and global exchanges. Wealth management platforms with seamless links with good digital banking services access will allow customers and investors to manage payment flows seamlessly across borders. At the same time, they will be able to get attractive deposit rates in various currencies. And we want to be in this space, to be a leader in this space with all these objectives in mind. So this is really why we've been talking about how important it is for us to have this additional component in the form of the digital bank in our ecosystem. And I think we've been sharing a bit about the UK bank, in fact, quite a bit about the UK bank. It's a full license bank. We believe it will fit all these requirements and vision that we have very well. Because London has a status as a top financial center, very good connectivity to many parts of the world, and in terms of regulatory frameworks, they tend to be very forward-looking as well. And just to really wrap up for my summary, so we always have been sharing this slide, which shows iFAST at the center of this whole ecosystem, fintech ecosystem, bringing access in terms of the investment products, be it unit trusts, stocks, ETFs, bonds, insurance products, simple insurance products. And that really means we have to work with different exchanges. We can also, of course, apply to be a trading member on various exchanges. We have distribution agreements with different fund houses. So this is really the supply side of the products for us. And our customers on the other side will be the B2C customers, like the retail investors, the B2B customers, like your financial advisory or FA companies that sign up on our B2B. And in recent years, there are also different profiles of B2B companies signing up with us, including some of the financial institutions and even some of the stockbroking firms that have signed up with iFAST B2B to connect to our ecosystem and our infrastructure. And what the digital bank really adds is to open up new services, including online account opening, multi-currency deposits with attractive yields in various currencies, payment and remittance services, as well as banking as a service. So we strongly believe that this will add strong value to iFAST fintech ecosystem, as well as strong value, good value to our investors on both B2B and B2C. So with that, I have come to an end of my presentation. I won't really go through the rest of the slides, and back to you, Sudan.
Thank you, John Paul, for the quick summary of iFAST and what to expect going forward. Okay, so we have come to the Q&A session. So once again, here's the link and a QR code to scan to ask your questions at Slido. While I toggle to Slido, if any of the participants here have live questions, you can unmute yourself and ask the management team as well. In case there's no questions from the participants, so you go straight ahead to the questions that were sent earlier to us. Okay, so the first question is, here everybody's anonymous, no names out. Okay, the first question is by this person. He's asking, any more share buybacks planned?
Yeah, so we have one recently, and I guess maybe that's behind this question. I think if we just take a step back, besides the share buyback that we just did recently, I think if you go back to the previous one, I think that was quite some time ago. So almost, I think going back 2 years ago. So if you look at the share buybacks, it's not something that is extremely frequent. Whether we'll do more, well, it really depends on whether we find the opportunities to do so. So the last one, besides April 2022, I think it was roughly around April 2020. So that was really with the context as well of the company share price being at a lower level.
Okay, thanks, Jean Paul. Okay, next question is, how is decision making done at iFAST? Is it more centralized with the CEO, or is it decentralized? how much autonomy does the senior management team have?
Yes, so Mr. Lee Chang, he is the co-founder, he's the CEO and corporation, and he is involved in the business strategy, direction setting, and in fact actively involved in that for the various business divisions and various geographies where we are present in. But in terms of how decision making is done at iFAST, then how it works is every jurisdiction, every market will have a local general manager or managing director who is respectively in charge of their business divisions. So if I can use let's say Singapore as an example, we have a general manager for the B2C, which is FSM1. We also have a separate general manager for iFAST B2B in Singapore, and a separate general manager as well for iFAST Singapore IGM. IGM is our iFAST Global Markets business division, which is essentially an advisory team. And in terms of the day-to-day decision making, so the different general managers in charge of their business divisions are essentially running their business divisions with their respective teams, with the different backend teams, the IT teams, to ensure that business is running smoothly for our customers. And for Mr. Lim, the CEO, he will be involved at a more higher level, at a more strategic level, in terms of ensuring that the goal setting, the vision of what we want to achieve is clear, and that it's being clearly followed through, it's being clearly executed. So that's how decision making and the various businesses within iFAST are being run. So if I use the same logic, you will have different general managers and managing directors also in charge in the other jurisdictions. So Hong Kong, China, Malaysia, India, and obviously the newest entity we work is the bank. So with its own team as well, running day-to-day operations. And I have China as well with me here today. So he has been part of this project, looking into the bank acquisition, and obviously post that also heavily involved in talking to the UK bank team on a regular basis. Of course, as part of decision making, there will be regular board of directors meetings as well. So we have different boards in charge of, or at least running their respective jurisdictions in all these markets.
Okay, thanks. You mentioned about the bank in the UK. So is there a dedicated team on the ground in UK as well from iFAST?
Yeah, for the bank itself, in the UK, we do have a team on the ground who's running it on a day-to-day basis. So they have their local management team, they have their local various head of departments, as well as various employees looking at different functions. But what we will do is at group level, what we can do is without them. Say, for example, they may need some additional IT support and services. This is where as a group, we can provide them with such support, we can leverage on us, and therefore they can benefit from what we are strongly capable of. It's just one example of how we support them on a basis, so that they don't have to go huge, say for example, IT teams, or they don't have to have huge operations team, etc.
Okay, cool. Thanks, guys. Okay, next question. It's on working capital needs. So in general, how much cash is needed for working capital, and what does iFAST plan to do with the rest of the cash on the balance sheet?
Yes, so for us, it's if you look at iFAST business and the revenue structure alike, then it's a very cash generative business with a very strong recurring revenue flows. In fact, the majority of their revenue is recurring. And if you're looking at let's say the working capital numbers that we have, of course, recently we have the share placement, so that's added to the amount of proceeds we have on hand. So what do we plan to do with that? I mean, just now, as part of the 4-year plan, we talked about how we want to strengthen this fintech wealth management business of ours. We want to build a truly global business model. I think the digital bank comes in very nicely into that. There could be other opportunities in future that can add and strengthen that ecosystem that we're using, and are in a way adjacent to adjacent fintech capabilities. So besides digital banking, I think one example we have previously shared was in bond business. So these are some of the opportunities that we are working on. It doesn't necessarily mean we have to deploy excessive working capital at this point, but in terms of how we're looking at growing your business. So these are some of the areas that we could be looking into in future as we build this through the business model.
Okay. So the next question is on iFAST Global Bank. I think it's for Chuan Yong. What can we expect for the first product to be launched from the bank?
Yeah, we are targeting for the first product to be launched in the second half of this year. The first product essentially is the online account multi-currency deposits. So that's what we are shooting for second half of this year.
Okay, cool. Okay, so we have a few banking questions, so let's just get to them first. Okay, that's this. Can you outline the plans for how you will leverage the global bank and what are the future plans?
Yeah, I think in terms of leveraging the global bank, first of all, I mentioned that the way we see it is digital banking is an adjacent service to our core business in wealth management. So as a bank, what it can do is can provide online account opening, can provide deposit taking, can provide payments, it can provide loans in the future. So we see these as the areas where, as a wealth management platform, core business and wealth management, we can leverage on the bank for these different types of capabilities going forward in the future. So I think that's the first one. The second one is we also look at the wealth management business as well, where we see that the starting point is always the ability for customers to have a bank account first, and then money will go to bank account deposits. That's why we think that the banks naturally have sort of advantage over us for many years in terms of access to customers and their monies. So in this case, once we can facilitate online account for customers all around the world, for subject to KYC, CDB, stuff like that, and the monies, there will be new customers coming, there will be new monies coming to our overall ecosystem as well. Some of these customers and monies that come in through the bank will eventually be have some spillover effect to our wealth management business. So the money coming not just for our deposits, not just for paying loans in the future, but we believe some of it can also spill over to our wealth management business and benefit our wealth management business. So I think that's how we see it in the long run. Near term, second half of the year, we see a company and multi-currency deposits. Then I think down the road, next 2-3 years, there are things that we can different type of capabilities as well as loan products. Those will be the areas that we're interested in.
Okay. Will the first product launched in the later part of the year, the multi-currency account, if I'm not wrong, will it be available for Singaporeans as well, or just limited to certain people?
Yeah. The way it is to be built is that it's open to customers, individuals around the world. Of course, we know that we can't bank in UK can't start running advertising campaign here in Singapore to target Singaporeans directly. So that can't be done. It's sort of a reverse solicitation kind of a method, meaning that if Singaporean surf the net or know that there's a iFAST Global Bank, go to the bank website or even download the app in the future. If the Singaporean is interested to open a bank account and place deposits with that UK bank, the Singaporean can go ahead and do so on its own. So this is what we meant by non-solicitation kind of method. That's fine. That can be done. Yeah.
Okay, cool. Sounds exciting. Next question with regards to the bank, let me just take a look. Can you elaborate on the banking as a service offering type to the digital bank, and what development stage are we in for that?
I think for banking as a service, what we are looking at is really providing payment services to the other banks, the other financial institutions, or the other fintechs in the UK itself. Currently in the UK environment, there are only about 30 plus direct members of checks. And then there's another 30 plus direct members of faster payments. iFAST Global Bank is one of these 30 plus direct members. What it means is that you have direct access to such payment infrastructure in the UK. For the rest of the financial institutions, building societies, other smaller banks, other fintechs who don't have direct access to these payment systems, they will need to go through, say, the likes of iFAST Global Bank. So this is where we see an opportunity for us to come into the space here to provide such services to other financial services players in the market. I think we try to get it as a two-stage process. Right now, being a direct member with the infrastructure, we can already start to do so. But what is happening in the market at this point in time in the UK is also that there is a upgrading of the infrastructure that will take place over the next few years. That is known as a new payments architecture. And I think from what the public information is available right now at this point in time, the payment regulators in the UK are shooting for this new payments architecture to go live in 2025. So I say it's a two-stage process because right now we can already start to go out to the market based on our current infrastructure, but at the same time we will have to upgrade the systems to cater for the new payments architecture that will come in around year 2025 as well also. So I think in terms of at which stage we are at, I think we are still at a pretty early stage as far as this banking as a service is concerned.
Okay, cool. So there's I think one more question with regards to bank. With the current geopolitical situation, especially in Europe, is your projection for your acquisition of the London bank still realistic?
I would probably look at it in two parts again. The first part is based on the current businesses of the bank itself, the bank that we bought. What we call business is in consumer remittance. The consumer remittance business, the active corridors are outside of UK. The active corridors are corridors that's between Middle East and South Asia and different parts of Asia. So in terms of the revenue coming in from those corridors, we don't think that has a direct sort of a relationship with the geopolitical situation in Europe. So that's not too much of a concern. The other core business of the bank currently is what we call the wholesale currency services. The wholesale currency services basically is a business of sourcing for providing physical banknotes, especially to say, for example, the likes of players in the travel industry. So now with the recovery of travel, opening up of borders around the world, it's actually a good sign for us for this particular business unit on a year basis. This is the first part. The second part is as we are looking at enabling the online account opening capability and to start to accept customers and deposits from around the world, it means that we are not really just focusing on the European market or the domestic market in the UK itself. We are setting our sights on a much larger market, what we call the global market. And I think this is a number of times where the CEO John Chun mentioned that he hopes he is targeting to build a truly global business via this digital bank that we are building in the UK London itself. So for the second part of things, we don't really see geopolitical situation in Europe as a concern because for us it's really to tap into the world as a whole, starting with the iFAST's ecosystem in Asia. So that's all.
Okay, cool. There's one question on still on banking. Can iFAST collect deposits from consumers Asia with UK license?
Yeah, so
Roughly, yeah.
like I was trying to describe earlier as well, in terms of accepting deposits from around the world, so long as an individual who on his own go to iFAST Global Bank website, carry out the account opening, can clear through the account opening requirements, KYC and stuff like that, it is alright for the UK bank to accept deposits. What we can't do is we can't, for the UK bank can't, say for example, go to Singapore and start to run advertising campaigns that's targeted at Singaporeans. So that's a no-go. Yeah.
Okay.
So I think the question here also asked about how much deposit is targeted in this next few years. I think we have not shared such numbers publicly. I don't think I'll be able to share such figures here in this particular session. But what I can talk about is the 1% that we are 1% net interest margin that we are targeting. So I think we've been speaking about this 1% net interest margin publicly for some time already as well also. So as we collect deposits, of course, we've got to be able to use these deposits to generate interest income. And for us, I think we are looking at 1% net interest income. So that's sort of how we're guiding our investors at this point in time.
Yeah,
in terms of
So then can I have a follow-up question for Chuan Yong, please?
yeah, sure.
Yeah, thanks. So Chuan Yong, I understand that for deposits, we can't actively market to consumers in Asia for now with the UK license. And I'm just wondering whether do iFAST have any expectations on where the deposits will be coming from given this situation, whether most of it in the first few years will be coming from UK consumers itself, or is iFAST also expecting quite a broad spread out across countries where people will just go to the website, register an account and put deposits with the company?
We believe that on an immediate basis, in maybe the next 1 year or so, more of the deposits will still come from Asia. And in this case, we are looking at probably quite a sizable portion will come from, say, for example, Hong Kong. I think we know that you can read from public reports that there's a big outflow of deposits from Hong Kong to various parts of the world. Especially, I think UK is one of the destinations that Hong Kongers are actively seeking. So as the Hong Kongers are seeking to move out of Hong Kong for whatever reasons, they are also looking to move their monies, their assets out of Hong Kong, and UK is one of their preferred destinations. So as far as the way we observe how the situation is going, we think that quite a sizable portion of our initial year of deposits will come from Hong Kong. But we do expect that over time, as we grow, we will definitely be looking at local deposits as well. So it's not just going to be solely coming from Asia, but I think we'll be looking at domestic deposits as well too.
Yep, thank you.
Okay, so in terms of, just a follow-up, Chuan Yong. So in terms of for the Hong Kong residents, is it possible to market the bank in Hong Kong itself?
Similarly, we can't be going to Hong Kong to say, hey, come and open an account with iFAST Global Bank. Yeah, we do that directly. But as Hong Kongers are looking to move out, and as they are looking to move to, say, places like the UK, they will do their own homework on how they can move their monies, their wealth. Of course, they also will be in touch with a number of, I think, immigration kind of agents will help them process such plans and work that they have in mind. Yeah, so we can't be directly doing kind of marketing campaigns in Hong Kong.
So it's more of like an indirect way for the residents to know about it.
Yeah, correct.
Okay. No, I'm just wondering how the process will be, because if they don't know the existence of the bank itself, then how would they know? In the first place.
I think if you look at private banking space, sometimes we talk about it as private bankers. Say, for example, private bankers in Singapore. Investments also coming from I think it's just Singapore investments that's domestically in Singapore itself. I think for such a global financial market as Singapore, we do have a significant amount of inflow from overseas investors as well too, and they are well served. I think today they are decently served by private bankers. I think there are ways that we can probably leverage on a similar manner as well too.
Okay, makes sense. Okay, so next question is with regards to the e-pension project in Hong Kong. How's the payment terms for the Hong Kong eMPF project? Are the receivables expected to go up?
Yeah, for the Hong Kong e-pension project, it's a multi-year project in terms of providing support and solutions in terms of digitalizing that service. So it's a multi-year, meaning 7 years in this case. So the payment terms will be spread out over that period of time. There's a possibility that the client may want to extend beyond that, let's say up to 3 years more. So that will be something that needs to be decided on the client's point of view in the future. Is it expected to go up? So I guess in our updated guidance that we have shared with investors, so just now on slide 24, first Q 2022 results, right? So that essentially kind of like shows there's a bit of a gradual onboarding that begins sometime in 2023, and eventually that step up in terms of the revenue targets, and also the PBT targets will go higher. So that will go higher in 2025. So we've given numbers for 2023, 2024, and 2025. So we've shared that with investors.
So still on the e-pension project. Are there pension projects in other countries that iFAST is targeting or can target in the future, given the large size and profits from such projects?
The Hong Kong e-pension division that we have set up, it will have its hands full in terms of ensuring that we provide high quality solutions and services to the clients. So in terms of whether there will be other similar types of projects, I think if we look at that scale, I think if you look at other Asian jurisdictions, that is not so obvious now. Yeah, because we're talking about the pension scheme that is really quite unique and large in that sense. But as to whether there could be future opportunities, it is not something extremely concrete at this point, but we can imagine that as we develop our expertise, even starting from Singapore, because we are involved in the CPF investment administration as a CPF IA investment administrator. And also we had some involvement as well in the Malaysian PPF project by providing fintech solutions. So there could be, that kind of information, there could be hopefully more opportunities in some other jurisdictions in the future. But like I said, it's really having to balance that with that context. That context is really that Hong Kong pension scheme and our Hong Kong e-pension solutions really work out something quite different.
So next question is with regards to recurring fees. Are most recurring fees collected in areas quarterly? If so, does it mean free cash flow conversion is low? Would this change in the future?
Yeah, so in terms of the fees, I think the examples given here, the traders, web, and platform fees, are they collected on a daily basis? So these are some of the fees from the client side, let's say, if it's about, let's say, the web fees and the platform fees. So these are collected on a quarterly basis. The trader fees would be the fees that we receive from our fund house partners or distributors. They distribute their products on our platform. And in terms of timelines, there's a bit of a mixture. So some of them will be on a quarterly basis, some of them will be on a shorter basis of a month. Having said that, would it affect the numbers for a quarter? The answer is no. But on a shorter period, let's say a month, yes, there could be some of these numbers being lower, but for a quarter, it doesn't affect.
Okay, next question is with regards to CapEx. What are the major tech projects in the next few years? When would capital expenditure and depreciation and amortization figures converge more?
Yeah, I think if you look at what we've been sharing, so I think the couple of major projects, the first one would be the Hong Kong e-pension and also the UK bank. We would see these two as very important projects for us. We want to ensure that the quality of our services, the fintech solutions we provide will be strong and robust. So I think in terms of some of the focuses that we are looking at from an IT point of view, from a fintech point of view, those are a couple of the projects. And it will last obviously for quite a number of years. Yeah. There could be other projects, of course, that are more new in nature that could come up in the future. But even looking at our current business, our organic growth, right? As a fintech wealth management platform, ensuring that our fintech keeps getting better over time, it's something that will continue. And because of that, we can expect that our fintech solutions and developments will continue. The expenditure related to that will also continue because we have to ensure that as a leading fintech wealth management platform, we need to ensure that our fintech solutions for our clients keep getting better over time because that is probably the least we should expect from ourselves, but also we want to ensure our clients have access to the top-notch kind of solutions in the marketplace. So the second part of the question, would that then therefore converge more? Well, if we take into account the couple of projects I mentioned, the fact that we want to keep ensuring that our services and the quality of our fintech keeps improving, maybe not so much in the shorter term, because the convergence that this question is referring to. But maybe at some point when some of these solutions or the bigger projects have kind of been developed or completed, there could be some closer convergence. But having said that, as I said, as a fintech platform, we have to ensure that our fintech solutions just keep improving over time. So I think that again, therefore, affects some of the capex numbers.
So the next question is with regard to iFAST's longer term vision. What is it? Is it going to be a one-stop financial service provider, like a fintech super app, something like SoFi? Probably, I think this question is aimed more towards beyond your 4 years in the sense. That's what I think.
Yes, I think if we're looking at time horizon, I think iFAST, the management team here has a long-term time horizon in terms of where to bring this business towards to. And it's not a business that is looking at just short-term growth numbers, but long-term progress and development, sustainability in a sense. So the vision is really to build a business that is a truly global fintech wealth management platform that can support investors. So these are investors that are like your retail investors using our business to consumer solutions at FSM. But B2C is just one part of our business. If we go back to our AUA breakdown, 30% comes from B2C clients, right? But the majority of the AUA comes from our B2B business. And that's really because it's that scalable part of the business. And that is a part of the business that in many ways, a lot of financial institutions do not really focus on. So the thinking that we should be building a platform and an infrastructure to help other companies grow, I think it's something that is maybe not so straightforward or natural to a lot of financial institutions to think of, because they were thinking of how to grow my own business, how to get more clients for myself. But I think for B2B, that is very different. And the reason is really because when we look at building a truly global business model, it's just growing an ecosystem of B2B partnerships as well as B2C clients. So really, that is the vision of iFAST. And what comes into that ecosystem to help these B2B and B2C clients better is what we have already built, the various products and services, unit trust, stocks and ETFs, so basically access to important exchanges around the world. Bonds, we are looking at improving our bonds offering, our bonds marketplace for clients. The bank, as Chanya has been sharing, other solutions like simple insurance products as well, and of course e-pension business. So these are various things that we're looking at to really grow that ecosystem and our so that's really a much longer term vision. Like Sudan says, it's not just a 4-year. Of course, 4-year plan is really to give a bit more details and colors for the next 4 years, right? Just what we want to achieve. Yeah. So I think it's very hard to compare to maybe some of these other names that are being mentioned, because sometimes some of these players are very focused on just maybe B2C, just direct to consumers offerings. So as I said, for iFAST, it's not just B2C; it's also a very important and a larger B2B, and that's very much the unique revenue and business model I think for iFAST compared to a lot of FIs out there.
Okay. Good point you mentioned about helping financial institutions on the B2B side to build up their own backend. I remember, I think 1 or 2 years back, iFAST was involved in Tiger Broker's backend as well, and that was publicly announced in the annual report. Maybe you could share a bit more about that, and it's quite related to the next question that someone posted as well.
Yes. So for us, in terms of how we will deepen, broaden some of these partnerships with FA companies in the various markets that we are in, it's ensuring that we provide the infrastructure, the products and services that can make these companies feel when I sign up with iFAST, I have the ability to market to my clients seamlessly and maybe very quickly. Because I think if we use Singapore as an example, it tries to attract more companies to set up operations here, right? So some of these companies, when they do so, they will be thinking to themselves, do I do a lot of the setup on my own, or do I pay IT vendor to build it out for me, or do I use a platform like iFAST that I can connect to, and I can market my services to my clients relatively quickly, and knowing that the system, in terms of the connectivity, the fintech and so on, is pretty robust. So I think that for us, that's really how we look at how to deepen the relationship with some of these potential B2B partners. You mentioned about some of the stockbrokers, Sudan just now. So I think that's really back to my point. So I think Singapore as a jurisdiction is able to attract a lot of new players. So these include the likes of some of the stockbrokers. And for us, we are open to how we can collaborate with some of these new players in town. Because it adds to our ecosystem, it adds to our revenue streams as well. Because if they connect to us and distribute unit trust, there will be sharings of unit trust revenue fees. If they connect to us because we are a trading member of a certain exchange, we also earn a cut of their revenue streams and so on and so forth. Yeah. So not so much about that last part of the question on SMA, because I'm guessing that's really about the stocks managed accounts. So that's a very specific service, if I understand the question. So not so much specific that service, although we can offer it too. But it's more like broadly stocks, ETFs, unit trust, bonds and so on. If some of these FIs want to connect to iFAST, we are open and see how we can help them.
Thanks for answering the question. I was actually referring to this particular question that just came in. But yeah, thanks for answering the previous question as well. On consumer brokerage, how does iFAST see competition from IB, Tiger, moomoo, which appear to have good tech too? how's iFAST special? And maybe you can also touch on the services that you did for Tiger as well in this question, if that's possible. Yeah.
Yes. So I think firstly the competitive landscape. So I think what has happened in Singapore in the past couple of years is the entrance of a lot of new players. So we're talking of stockbrokers, whether it's the China stockbrokers, but also some of the international American players. There are also other types of players like the robo-advisory players that have entered the marketplace. So in terms of competition, we need to be clear for us when we look at it how our B2C especially sets out. Because these stockbrokers, they're essentially in the B2C space. And they're competing therefore with our B2C. And when we look at some of the stockbrokers, some of them have good user interfaces and they are quite advanced in terms of the app services and so on. But the other thing, of course, is some of them they try to attract clients by having a very low price point. So it's a very competitive price range that they offer in order to attract more customers. For us, at iFAST, when we look at these developments, we want to clear that we offer a whole suite of services that may not necessarily be the cheapest in town. Because if we are a company that feel pressure every time our price changes, then I think it's also a bit of a worry. I think not just for the company, but also for investors to know that this company is always under pressure to change pricing just because so and so a new player in town does that. So that's one very important point. And also, of course, secondly, when we look at the pricing, we feel that we need to price ourselves on our B2C for stockbroking to be very competitive. Maybe not necessarily the cheapest, but competitive across including the quality of our service, including client services. So I think one feedback we have received is our clients also find that the ability to be able to reach out and connect to our client services hotline is actually something that they have felt is good. And I guess the background to that is maybe when they call or reach out to some of the other players, maybe it's not so straightforward to be able to talk to somebody. It's either call reach or maybe it's I have to press a lot of buttons to be able to finally speak to a human being. So I think these are some of the intangible services. But if I go back to one other point then, if I look at SGX trading on our B2C, I think it's a very fair, fairly competitive price point for us where we charge a flat 880 for SGX trading. So I think it's a price point that a lot of players in the marketplace do not have. Even till today, they don't charge a flat price. So usually it's a commission rate and a lower minimum sales charge. Yeah. So back to why iFAST is special then, I would see this question not just from a B2C point of view, but back to how I answered the question just now on a B2B point of view. Because some of these players could be using us, and I think Sudan you were alluding to it already just now. So some of them use us because they want to connect to the fact that we are SGX trading member. So maybe not so straightforward to enter Singapore market as a new player and right away be an SGX trading member. Entails a number of considerations, including time spent, to connect. And of course approval by the authorities and so on. So how about just connecting to iFAST? Yeah, and that quickens my ability to market my services to you, right, as a consumer. So and I think that is what makes iFAST very different, right? As I was sharing just now, because some of these so-called competitors are actually our clients, therefore, on B2B, and we earn revenue streams from them as well. And it's not just for stockbrokers, but also for the robo-advisory.
I think with regards to customer service, I think I would attest to that. It's I would say FSM1 is a very good customer service because I personally use FSM1 for my brokerage as a broker, and whenever I call them, there's someone picking up the phone and it's not going to a computer. So and I think they're well trained. The customer service, they're polite. They get my questions answered. So that's a good thing for FSM1. And with regards to fees, lower fees from the competitors, I think recently Business Times ran an article on that. It's actually not so cheap compared, when you add up different fees, there's SEC fees coming up and stuff. So it may not be that cheap compared to what's being marketed. Yeah.
Yes, thanks Sudan for the shout out in terms of using our services. We hope we can continue to provide good services to you and also investors. I think we just take a step back for this question. I think when we look at some of the global trends, right? So some of the stockbrokers that are, let's say in the US, saying that they offer zero-com trading services. The other question that comes with it is then how does that company sustain its services and quality of its services? So I think in the US there are a number of very good prime examples. So I think what we notice is, of course, then they have to rely on various other ways of generating revenues, right? So be it on order flows or be it on having to offer and being pressured to offer, let's say, crypto trading services, because at the end of the day, maybe that sells and that gives them money. Yeah, but these are things that at iFAST we are extremely careful and very deliberately mindful about. So when it comes to certain products, we want to stick to those core investment products that are simple in nature. We traditionally don't see a lot of structured products. We are also against crypto trading because we don't believe that it adds value to investors if they want to build retirement portfolios. It's a very speculative investment share class, we believe. So these are decisions we take as a company that we will not distribute. But there are a number of players, obviously, in the US that have done that and they've benefited. But of course, when the tides change, so when, let's say, there's a crypto downfall or pressures, I think then that's where you see some of the pressures coming in because the revenue sources and streams coming from, let's say, cryptos kind of slow down considerably and so on.
Okay, so the next question is with regard to more technical. So is there any reason why the company chooses to present EBITDA, which is earnings before interest, taxes, and amortization, instead of EBITDA, which is earnings before interest, taxation, depreciation, and amortization in the presentation?
For us, in terms of the format, we've been presenting it this way all along. So yeah, I'm not too sure how I can give a technical answer to this question.
Yeah, sure, no worries.
Just to add some color to look at the details that we received from our ISD. So they actually mentioned that like we started using EBITDA based on the new accounting measures that we started to adopt since financial year 2019. Yeah, so it's a better way to compare some of the numbers that we have. Yeah, and I think they also mentioned something about the depreciation of ROU sets, which is included. Okay. So yeah, just a little more details on that. Yeah, sure. Thanks for that. So it's been for a few years already. Yes, for the past few years.
Okay, cool. Thanks, Keith, for the answer. We can't see you in the camera, but thanks for that.
Yes.
Okay, so the next question is with regard to share price and SBC, share-based compensation. iFAST share price has shot up a lot in the past few years and come down recently. How has the price movement affected the SBC or share-based compensation or employee equity plans, if any?
Yes, indeed, the share price has risen a lot in the last few years and has also fallen in the last few months by quite a bit. And in terms of, I guess the question is asking about the employee share plans. And for iFAST, we have iFAST performance share plan. So in terms of how we look at it is to ensure that we can reward our employees and align employees' interests with the company's long-term growth. And it's based on their performance, it's based on their contributions and so on. So there's a framework and there's a matrix behind that in terms of how different employees can have the performance share plan. Our performance share plan for employees, if you look at the last few years, typically it happens in the early part of the year. So we make an announcement in terms of how much, in terms of the shares will be so-called given out to employees. And of course, there's also a vesting period behind it. So typically, for most years, not all years, but for most years, we're looking at a vesting period of up to 3 years. So I think, just to give an example, perhaps for one example, only 1/3 of the shares can be vested for our employees after 2 years, and let's say 2/3 of the performance shares can be vested after 3 years. So these are some of the various things that we do for our performance share and for our employees. So to answer this question, I mean, then it doesn't really, it's not something that's ongoing throughout the year. So we try to have it typically for the employees once a year. In fact, traditionally, if you look at it, it's roughly around March each year. So if you look at our announcements, you'll be able to actually see more details and colors on that. Yeah.
Okay, thanks. Last question, last but not the least, how large is the share buyback program that you're doing? And is there any expiry date?
Yeah, I mean, the share buyback, we had a question just now as well. So I think we did one after 2 years break, a bit of a hiatus. I think it's roughly about 2 years. And in terms of the amount, let me just go back to the announcement. So it's on 25th of April. So total number of shares purchased was about 400,000. So I think in terms of dollar consideration, almost $2 million. And then that is usually part of the treasury shares pool. And we may use this for various purposes, including the common shares as well. So we've done that before, and usually how we would do it is we use the treasury shares for purposes like performance shares and so on. We will make an announcement, and investors are able to also know the details. Yeah. Keith, maybe you have any additional information or colors on this question? Yeah. Essentially, I guess that's there, right? Yeah. So for share life mandates, we do have we will need to get our shareholders approval every year during our AGM. So the maximum number of shares that we can buy every year will need to be approved by our shareholders, and those numbers can actually be found in our AGM, or rather our notice of AGM and our annual reports. That's okay. Those if you're interested to find out the exact figures.
Sure, thanks Keith and Jean-Paul. That brings us to the end of the AMA session. Thank you so much, iFAST team, Keith, Chuan Yong, and JP Wong, for taking time off on a weekday office hours to answer the questions from our investors, and also for the presentation that we did earlier. Thank you so much for participants. We have got a poll. If you could answer that poll, that'd be useful for us. And once again, thank you so much, and have a great day ahead, everyone. Thank you.
Thanks, Glenn, and to your team, and to all investors who have joined us. Yeah, thank you. Take care.
Thank you. Take care. Bye bye.